Mortgage rates recently fell, and the Fed predicts that there could be 2 more coming before the end of the year. So, do you jump in now and take advantage of the momentum, or do you wait and risk getting outbid if the market heats up again? Your decision here could determine how much house you can actually afford and whether you're going to be getting a new set of keys now or having to wait until 2026. In this video, I'll be breaking down what's really happening with interest rates, what local housing data is saying about price and inventory, and how to think about timing so that you can make the smartest move possible for yourselves. I'm Brian, a teacher-turned-realtor trying to help housing make sense for first-time homebuyers in the Indianapolis area. Let's get into it. First-time homebuyers, really any homebuyers, have been feeling the squeeze about affordability and competition. For the last several years, one of the big factors in housing has been competition because inventory has been so low. We've seen in 2025 a definitive uptick in the inventory that's available, which of course is a good thing. But that hasn't necessarily done much for affordability. One of the biggest complaints overall about housing is that everything is just so expensive. One of the questions that I continue to wrestle with is, where are the homes for the first-time home buyers? For years, one of the complaints has been just how much homes cost nowadays, and I don't disagree with that. When I look at home prices, affordable homes are generally $250 plus, and the majority I would say are in the $300,000 to $400,000 to even $500,000 range. A very popular thing for people to do nowadays, as they're thinking about in the housing market, is, oh, you know what? I'll just wait until next year. And this is being recorded at the end of September, and so that's a very popular thought process is, oh, we'll just put this off until next year, wait till after the holidays. Maybe, in 2026, you work a job where you're going to have a pay increase at the beginning of the year. Obviously, that's a good thing. I'm certainly not making this video to try and rush anyone into a decision right now, but there is a danger in waiting because of just the realization of the fact that no one knows what the hell's going to happen. There's so many factors that go into housing prices and availability outside of just mortgage rates. And that's in and of itself, its own topic is what's going to happen with mortgage rates. But let's even put that on the side for right now. If something were to happen worldwide, just a conflict that affects, oil prices or just the instability in the world financial system, and ultimately that affects our financial system. And when our financial system is affected, well, prices inevitably go up for things. If our economy continues to go well, which it seems to be doing right now, well, then, that can be a good thing for housing. But if the economy, for whatever reason, goes into the crapper, kind of like it did in 2020, we're going to get everybody's magical wish of interest rates dropping super fast. But if that happens, it actually means our economy sucks. And if interest rates drop super fast, well, then what we're going to see is millions, literally millions of people get off the sideline to want to get into the housing market. And then what happens to pricing at that point? Well, it only goes up. In Indianapolis, currently, as of September, well, I guess it would be through the end of August, the median sale price of homes was $257,000. Back in January of 2025, that was $244,500. In other words, in 8 months of the year, the median price of homes have gone up 5%. But what that means for you, as somebody who says, I want to wait until next year before making a decision, well, that only means that the home prices are going to be higher next year just based on historical data, just based on how things have been here in the Indianapolis area in 2025 alone. So while, yes, you might be paying a higher interest rate right now, and that's a might, there's no guarantee next year's rates are going to be lower. And I can't even guarantee prices are going to be higher, but historically, prices are going to be higher. And so you wind up paying more for a similar house next year just by waiting. So the recent news about mortgage rates dropping had to do with the expectation that the Fed was going to drop the federal fund rate. Now, I've made previous videos about this, saying that mortgage rates are not directly affected by the Fed fund rate. They're influenced, but not directly affected. The Fed fund rate affects short-term borrowing, car loans, credit card loans, refinancing of houses, things like that. But again, it's all based on expectations, where the Fed right now has said that they expect there to be 2 more rate drops by the end of the year. That is nothing more than a crystal ball prediction. And so if you are somebody who is waiting because you've heard this news and you're thinking, oh, I'm just going to wait and see what happens, 2 things factor in there. Number 1, there is absolutely no way that you can guarantee that prediction coming true. And number 2, I've already talked about how the median price of homes goes up over the course of time. And so the longer you wait, the more likely you're paying more for that house later. When it comes down to it, the biggest decision in your bag for buying a house has to do with whether or not you're comfortable affording a house in your current situation. And that current situation could be right now. That current situation could be 6 months from now or a year from now. It doesn't really matter. But that's what you really have to think about when you're considering whether or not to buy a house. Don't worry about what the interest rates are, because you can't control that. You can control how much money you are saving so that you can have a bigger down payment. The bigger down payment that you have actually can bring your rate down when it comes to getting a loan for a house anyway. So you can help yourself by continuing to just sock away money so that you have a nice pot of money sitting there for when you need that down payment for purchasing the house. Your financial situation is the most important. If, based on whatever the current interest rate is, and based on your other expenses, can you afford the monthly payment based on that interest rate, based on insurance, based on taxes? All 3 of those things go into determining your monthly cost for a house. If you can afford all of that as a monthly mortgage payment, you're in a position to buy a house. You want to make sure you have some cushion there. You don't want all of your money to be going towards that mortgage payment on a monthly basis. You got to have money for doing other things. You got to have money for utilities. You got to have money for gas for your car. There are a lot of other factors that go into it. But those are the important things to think about, not waiting for some magical interest rate number. When it comes to timing, there really are 4 questions that we're going to focus on. Number 1, I actually just hit. Number 1 is it a good time to buy? Well, that is different for everybody, and the only one that matters to is you. Question number 2 is, should you wait? Well, I've already talked about the fact that the longer you wait, the more expensive the houses are. Number 3, will prices drop? Everybody thinks that prices are coming down at various times. And many people think, I'm just going to wait for prices to come down. You know what? Prices don't generally come down. If you see that prices for homes are dropping when it comes to looking at homes that you're interested in, factors involved there could be how much other inventory is there available in the area. Do they have a lot of competition that they're having to go up against? Is it potentially that home was priced too high to begin with? And so with the price being too high, it had less people interested in seeing it or wanting to make an offer on it. And so what do they inevitably have to do? Drop the price in order to gain more eyeballs and get more interest. So if you see prices coming down, it doesn't necessarily mean that all prices are coming down. It could be specific to one property or maybe one area, depending on what's happening in that particular area. But waiting for prices to come down, which I hear often enough, prices, it's just not the way that our economic system works. When I was a kid, and I'm in my 50s right now, I could get a gallon of gas for less than $1. Now, I'm lucky if I can get it under $3, but this isn't a discussion about gas prices. Do you think that the gas company, the oil company, is going to ever go back to gas being under $1 per gallon? Hell no. prices go up. So waiting for this magical time when prices are going to come down, you're going to be waiting a very long time. And then question number 4 is, where are rates headed? I don't have a crystal ball. I have information that comes from the Fed, and with the number of factors that go into determining an interest rate, there's really no way of knowing what's going to happen with interest rates. I would recommend that you pay attention to some local people, whether it's realtors like myself in the Indianapolis area, whether it's lenders in the Indianapolis area that, they pay attention to, because, that's our world. We're paying attention to what's being said, what's being predicted, and things like that. So we, because it's our lives, kind of have our finger on the pulse of that community that you don't necessarily have to follow on a daily basis, but do pay attention to what people are saying so that you have somewhat of an expectation of where rates could be headed in the coming days. If you're a first-time home buyer, a future home buyer, there are 3 things that you need to focus on that you may be able to control, or at least be thinking about as you're considering buying a home, whether it's now or later. Number 1, do you have a stable job, and do you have some emergency funding in place? Job stability is important because you have to get approved for a loan for the house that you want to buy. So you have to show that you've had a stable job for a while with a steady paycheck, and all the factors that go into determining your approvability from a lender. And so with that, make sure that you have stability in your job, and I'd recommend an emergency fund or some sort of a side fund that you can utilize, whether that's going to be for a down payment eventually, or whether that's going to be for emergency funding in case something goes wrong and you're not left in a lurch because you're out of money because an emergency came up. Then number 2 goes to down payment savings, and I do have a previous video that you should go watch if you are interested in knowing more about conventional FHA, VA, and USDA loans, because I do talk in there about how much of a down payment that you need if you wanted to go and buy a house. Number 3 has to do with how long do you expect to be in the house? Because if you have, maybe a job where you could be transferred in a year or 2, or maybe 3, or whether you're in a job right now that isn't necessarily your career and you have the expectation that in the future you're going to be moving on to a new job, well then, how far away is that? Because if you're going to be moving in a year or 2, I'm going to be flat out honest with you. Don't buy a house, because you're going to wind up losing money in that situation. You don't gain enough equity in just a year or 2 to be able to sell the house when the time comes without losing money. Because on the back end, when you're selling your house, you've got fees to pay. You've got realtor fees to cover. You've got closing costs. There are factors involved that goes above and beyond just selling the house, because out of your profits for the house come the expenses that you incur while going through the selling process. And so if you've only been there a year or 2, you're not going to have enough money to cover those things, and you wind up losing money in the end. So rent. There's nothing wrong with renting if that's the best situation for you, and if this is for you, don't buy a house. Once again, I'm Brian, a realtor in Indianapolis and surrounding area, specializing in helping out first-time home buyers and, buyers in general. If you have any questions or need some assistance, my connection is down in the show notes. Feel free to click on that and reach out to me, or just drop me a comment. Remember this, there is absolutely, positively no way that you can time the market, because there's a lot of factors that go into what controls the market, and we just don't have control over those things. Control the things that you can control so that you can be prepared when the time is right for you to get out there and buy a house. Thanks for watching.